Gold just overtook U.S. Treasuries, the biggest monetary shift in 30 years. Something historic just happened. For the first time in roughly 3 decades, gold has overtaken U.S. Treasuries as one of the world's largest reserve assets held by central banks. For years, U.S. government debt was considered the ultimate reserve asset. It was liquid, it paid interest, and it sat at the center of the global financial system. But according to new data highlighted by the European Central Bank, gold has now moved ahead of U.S. Treasuries in global reserve allocations. That raises a critical question. What are central banks seeing that most investors are missing? According to the European Central Bank's latest reserve analysis, gold represented approximately 27% of global official reserves at the end of 2025. U.S. Treasuries accounted for approximately 22%. The euro stood at roughly 15%. That means gold now occupies a larger share of global reserve assets than U.S. government bonds. This isn't a small milestone. Historically, Treasuries dominated reserve portfolios because they provided both liquidity and income. Gold provided neither. Gold pays no yield. It costs money to store, and yet central banks continue accumulating it. Why? Because reserve management is changing. The shift actually began years ago. After the 2022 freezing of Russian foreign reserves, many nations started reconsidering how reserve assets should be stored. Gold has one unique advantage: nobody else's liability. A treasury bond depends on the creditworthiness of the U.S. government. Gold simply exists. It cannot be sanctioned, it cannot be printed, it cannot be diluted by monetary policy. Since 2022, central banks have purchased gold at some of the fastest rates in modern history. Countries such as China, India, Poland, Turkey, and Kazakhstan have all increased holdings. The result has been a steady reallocation of reserve assets, not necessarily away from the dollar entirely, but toward neutral reserve assets, and gold sits at the top of that list. The simplest explanation is trust. Treasuries offer yield. Gold offers independence. And increasingly, central banks appear willing to sacrifice yield for security. The ECB notes that gold's rise was driven by both higher prices and continued central bank accumulation. Meanwhile, concerns continue growing around expanding government debt, persistent fiscal deficits, geopolitical fragmentation, sanctions risk, and currency debasement. Gold addresses all 5 of these concerns. In fact, central bank gold holdings now exceed 36,000 tons globally, approaching levels last seen during the Bretton Woods era. That's remarkable, because Bretton Woods was the last monetary system formally linked to gold. So, does this mean that the dollar is finished? No. This is where many commentators get it wrong. The dollar remains the dominant reserve currency. Gold overtaking treasuries is not the same thing as the dollar losing reserve currency status. Instead, it signals diversification. Central banks are adding alternatives. They're reducing concentration risk. They're building optionality. The global monetary system is not collapsing, it's evolving, and gold is playing a bigger role in that evolution. So what does this mean for investors? Investors should pay attention whenever central banks change behavior, because central banks operate on a longer time horizon than traders. They're not chasing quarterly earnings. They're not speculating. They're managing national reserves. And when reserve managers around the world steadily increase exposure to gold, they're sending a message. They see gold as strategic. They see gold as monetary. And they see gold as increasingly important in a world becoming less predictable.